All right, welcome to the daily market recap for Thursday, October 30th. In today's video, we'll be going over the action from the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like we do with every daily recap. So if you guys enjoy the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you could sign up for the Market Pulse Discord using the link in the comment section. Starting things off with the NASDAQ. Yesterday I said if it's a day that ends in Y, the NASDAQ goes up. So, of course, we get our first pullback here. A couple mega cap earnings along with the US China kind of agreement last night, and a little bit of a sell the news event. So, we have our first gap down, close under the 5-day moving average, and a little gap from what would that be, Monday to Tuesday. Still less volume than yesterday's price action, but this is now considered a hanging man candle where you follow through to the downside, usually marked relatively like short-term, intermediate-term tops. But after hours, Apple and Amazon have crushed earnings and we're rallying quite a bit higher. So we'll see how that action gets handled tomorrow. S&P 500 down 1.1% today, also gap down, close under the 5-day moving average at the low of the day, right into the support gap, still above the 10-day. And this has been seeing some weakness. We've seen a huge shift from basically everything in the market to mega cap tech. And we're seeing that in the difference between QQQ and SPY usually. Now, this was the first day that we saw just a rotation out of mega cap tech. Does that just reverse again tomorrow with Amazon and Apple? We'll see tomorrow. IWO, the growth stocks of the Russell 2000. Another day of a little concerning action. Close into the support gap, into that 20-day moving average. We definitely don't want to close below that. Otherwise, this looks like a lower high. And maybe we've got a date with the 50-day moving average. ARKK, another kind of concerning chart for me because we did have this little, I'll draw it again. We had a gap up off of the 20-day EMA, nice tight price action, and you would hope to see a follow through to the upside after that. Instead, what we got was a sizable gap down, loss of the 5, the 10, the 20-day moving averages, and a close on the low of the day, creating what's called an island gap, where you gap up, trade for a little bit, and gap down. That is usually a very bearish sign. The fact that we're closing under the 20-day, that's kind of my line in the sand for risk on, risk off. So that's not ideal price action either. So more than likely, I'm guessing we've got to pull back to the 50-day moving average, support gap, see how buyers step in there. But again, like we will get a gap up tomorrow, more than likely. And then as long as we don't take out today's low, we could still be building out a higher low overall. But that island gap, I've seen it quite a few times. And unless you close this gap basically immediately, it's not a great sign overall. Switching over so we can take a look at Bitcoin, another risk off indicator right here. We had two tests of the rising 20-day EMA, or simple moving average, excuse me, which that in itself is not very bearish because we had a nice bounce response to the 50-day, pull back, bounce again. Second rejection at the 50-day moving average, and you really don't want to pull right back into that same kind of area of support multiple times. The more that you pull back and the quicker that you pull back, the more likely you are to break that support and roll over to the downside. And I've seen a couple of charts on X that's saying that this might be a stage 3 top. And if that's the case, we probably do have like a sell-off, a bounce, more tightening, a lot of stuff to do. But overall, Bitcoin is not in an uptrend. It's definitely in a chopping phase, maybe a basing phase. Either way, not in an uptrend, so risk off indicator. Ethereum also right back into the lows of this pullback, not great sign overall. So we are starting to see some things stack up, at least with the indexes, the risk on, risk off for IWO and ARKK, along with crypto. Taking a look at the liquid leaders. Now, this is still where we get some nice strength. Today was a little bit weak, but yesterday we saw 9 out of 9 up on the day. Going through this, Google reported earnings yesterday, was up 2.5% today, but we opened on the high of the day, closed near the low of the day. So that gap up, just pure distribution. Kind of what we saw with Meta last quarter. And let's go to that Meta chart because we gapped up and then we never really went anywhere. And today, met a gap down, lost the 200-day moving average on just enormous volume, down 12%. Not great action. So we'll see if this is a gap up that like we build out here, or one that is kind of a sell the news event, and then we need to create a new base. STX, this is a new addition to the leaders list. I got rid of Tesla just because Tesla's been acting relatively weak. No new highs today. We closed under the 5, the 10, and right at that 20-day moving average. It's not a horrible looking chart by any means, but for the leaders list, we want the best stocks in the market, and right now STX is acting like one of those. Big gap up and strong close on earnings yesterday, up 19.1%. Great relative strength, up 1% today, opening on the low, closing on the high, back over that HVC. So really good action out of STX. MU down 1.1%, just pulling back to the support gap in the 5-day moving average. Any low volume pullbacks that close over the 5-day, I just look as constructive sideways action. And that's really what a lot of the leaders did today. NVIDIA, first unfilled gap down. So the sooner that we can close that, the better. But still, lower volume pullback, well over the 5-day moving average. Palantir down 2%, low volume pullback over the 5-day. This could just be a breakout retest right before earnings, which is November 3rd, and still be perfectly fine. VRT down 2.8%, took out the highs and then reversed, close it to the low of the day. Still over the 5-day, still above the support gap, lower volume today. AMD closed on the 5-day on lower volume, down 3.6%. SNDK down 4%, but is making new highs after hours after WDC reported. So not bearish action there. And then BE down 4.4%, still over the 5-day moving average, still not a bad looking chart. So the leaders are still acting well, but because we're seeing market breadth deteriorate, meaning the number of stocks that are participating in the rally, you tend to see a lot more stocks come down and then that money rotate into a smaller and smaller group. And as traders, you want to get your money into that group that's still holding up relatively well. So that's like, it's not surprising that the leaders are acting well while we see market breadth deteriorate. Now, what we don't want to see is further follow through to the downside from the leaders. If we see that, that's a big warning sign. Getting into the industry ETFs, we'll sort this by price percent change today. Gold miners, GDX, lower volume bounce off that 50-day moving average. We do close above the little resistance gap here, so that's a little solid action. XBI, biotech ETF, continues to be one of the leading themes in the market. Every pullback to the 10-day gets supported. We rally up through the 5-day. Today, up another 0.8%, 0.9%, and kind of mid-range close. XLF, still concerning action here. Kind of midway through the day, I was thinking, hey, it's awesome that we had this big gap down, but the fact that we're back to the 20-day moving average the next day, that kind of calms my worries a little bit. Unfortunately, by the end of the day, my worries were right back. We closed right near the low of the day, back through that entire resistance gap, didn't even touch the 20-day EMA, got close to it, but didn't overtake it. And if we're losing financials, which it looks like we kind of are with big dagger bar, gap down after a test of the 50-day, it's not a good sign for the overall market. XLV, the healthcare ETF, just sideways action over the 20-day EMA. NLR, nuclear and uranium theme combined, those two are still relatively strong. And if the market has any legs left, probably is the last group that gets squeezed higher. Really good action, especially out of the uranium names in that theme. So keep those on your watch list if you're trying to trade some stocks in the shorter term. But it really does feel like we are in for more of a correction in choppy action. XLP, that's in the stage 4 downtrend, not great. Cybersecurity closed under the 20-day EMA, even though some of the leaders are acting well there. Home builders ETF, right back to the 200-day moving average, closing on the low of the day. XLE still could be building out a higher low. And if we see money rotate from big tech, this is a theme that I could see that money rotating into. XLE hasn't led at all this entire uptrend, but a couple of the individual stocks in that group are acting well, PARR, DINO. So it wouldn't be too surprising if we see like a higher low against the 200-day here on the ETF chart, while those industry leaders within the group really start to rally. PEJ, leisure and entertainment, again, like the average American, this is what they're spending money on, and we got rejected at the 50-day, another weak close there. IGV software ETF closed under the 20-day EMA after kind of failing right at previous highs, not ideal. Semiconductors, this is still not doing anything wrong, down 1.3%. A little bit of elevated volume today, but not more than average, just slightly more than the last couple up days. Still over the 5-day moving average. Um, what else? XLY, excuse me, consumer discretionary. Thought this was holding up okay. Then today, big gap down through the 5, the 10, the 20, the 50-day, closing on the low of the day. Not good for the overall economy. KWEB, we had the meeting between Trump and Xi yesterday that seemed like it should be a strong price action from that. We got to sell the news event, little close under the 50-day moving average, along with the 5, the 10, the 20. I still have a couple positions in Chinese equities. BABA, I started Pony today, and then XPEV. None of those hit my stops, so I'm still staying with it because this could just be a higher low overall. On a bigger, like larger time frame, we're breaking out of the 3.5 year base. We pull back to that base breakout, and this could still be a higher low. So until those names stop me out, I still want to be in that theme. XRT, the retail ETF, rejection at the 50-day moving average, gap down yesterday, another gap down and weak close today, right near October 10th low. Not great. And then blockchain slash data centers losing the 5, the 10, the 20-day moving average with a gap down. So a lot of damage on the industry ETFs, a lot of damage in the indexes. The leaders, we're seeing still some strength as money is rotating into a smaller pool of stocks. Crypto is weak. And then on top of that, we have NAAIM, the Active Investors Exposure Index. So this is not a sentiment survey. This is their actual positioning. And they bought the market up way, way up this past week. We went from 90 to 100. If you've seen these videos, my recaps, 95% is kind of my line in the sand where that's where I start to look for reasons to get bearish in the market. And not to say that we're going to start a bear market or anything like that, but over 95%, who else is left to buy at that point? Like this could go over 100. Obviously, it's at 101 right now. I think it peaked at like 116 back in 2021. So there's still some room left to buy and get long, but you really see a lot of pivot failures. You see a lot of like gap ups getting sold off into as people de-risk. And you can see this is the first time we've been over 100% this entire year. So while the market is ripped higher, we've never been this overly bought while we're starting to see breadth deteriorate, indexes start to break down, crypto breaking down. Um, and then again, yeah, just smaller pool of stocks participating. So two kind of warning signs that I look for is NAAIM over 95%, and then unfilled gaps on the indexes. That is my like number two worry. We got that as well. And then the third domino for me to get like fully bearish is leaders breaking down, losing the 20-day EMA. That has not happened yet. When that does, that will be like the real risk off signal. Before we get into long and short setups, I do want to cover some of the earnings after the close today because they were spectacular. ATEC up 17.7%. Amazon, new all-time highs, up 13%. Reddit up 10%. WDC, which has been just a monster stock, up another 9.7%. That's going to help out SNDK. Net, which is one of the like leading stocks in that cybersecurity space, up 7.8% after hours. Rocket, you can see I have not looked at this chart in a while, up 8%. MSTR, which is a complete dog of a stock, bouncing back up 4%. That would be nice if we can get a little rally and then we can reshort that later. This has just been horrible. Riot up 3%, Apple up 2.8% into new all-time highs, Coinbase up 2.9%, and then Roku down 5, DXCM down 12.5. One thing that I want to cover is the Apple and Amazon earnings. Like with these large gap ups, while we're starting to see all these warning signs pick up, what I want to be aware of is if we get a gap up, is this a spot where indexes institutions can use those heavy liquidity areas to sell into, book profits, and de-risk? My guess is that's what's going to happen. But again, like we'll take this day by day. But the fact that we have all these kind of warning signs flashing, plus a couple of these mega cap stocks really gapping up after hours where you don't need a lot of liquidity to gap them up, you get a lot of liquidity at the open. We'll see if how we close tomorrow will be pretty indicative of where the market's going to be going. Getting into the long setups, first one we got Tesla. Week close today, so a couple different ways to play this. If we do get that gap up, a opening range break is buyable versus today's low and the 20-day EMA. That wouldn't really be the spot that I would be super excited to try, just because, again, like there's a lot of warning signs in the market. I would rather play on a little shakeout of the gap zone at 434, reclaim that area, and then a really tight stop at the low of the day would still be a higher low overall. But that's the area that I would be willing to actually take on some risk. NBIS has done a great job bouncing at the 50-day moving average, multiple gap ups since then, reclaim all the 5, the 10, the 20-day, pulling back, little undercut and reclaim of that 20, the support gap at 117.25. That would be the spot I would try and then get a 2 or 3% stop. CrowdStrike, this is probably going to gap up with NET's earnings, made new all-time highs on October 28th. Still, we'll keep alerts down at the support gap. If this doesn't happen tomorrow, then a couple days later, we could see the 10-day EMA catch up to that support gap at 530, and that's the spot that I would want to play it. STX, this is also gapping up with WDC's earnings. What I would want to see here is the gap up, pull back into the high volume close, so the closing price from yesterday, buy around that area. Stop would be today's low. QS, I think this could be a long or a short setup. We have obviously like a nice highest volume ever on July 25th, no, June 25th, excuse me. Nice linear move, got a nice base, rally back up. And then most recently, ugly close followed by a gap up, another gap up, and now tight price action. You could say that this is literally a lower high so far. So if you want to say break through today's low, that's a short. You've had your lower high bounce. We're starting a risk off environment. I think through today's low, stop at tomorrow's high of day would be a nice short. On the flip side, through today's high, stop at tomorrow's low. That would be the long setup. From these tight price contractions, you're going to get expansion, and you could play it in either direction. CCJ, highest volume in over a year on October 28th, up 23%. Nice sideways action. This goes with the uranium theme, one of, if not the strongest theme in the market right now, along with biotechs. Basically a double inside day. I know we took out yesterday's low for a couple seconds here, a couple minutes here, but really like consolidating after that big move up. A reclaim of the HVC, stop at today's low would be the trade. That does have earnings on November 5th, though. So if that's too close for you, that's fine. Just pass on that. LAES, another one of those kind of risk on, risk off names, more speculative. Nice move up from 250 up to $8, pulled into the 20-day moving average, bounced, potentially putting in a higher low off the 10-day. This to me would really set up nicely if we get one more tight day in the upper half of this daily range. Then on Monday through those highs, you could play that. But it'll be something on my radar, not something that I'm actually going to like pull the trigger and buy through tomorrow's high. But if you're a shorter term trader or day trader, this stock still has a lot of power, showing some relative strength through that area. And if we don't get sell-offs with those gap ups with Amazon and Apple, then that's a good spot to manage risk against. DVLT, I still have a couple shares in this big move up, pulled back, higher low. I bought this on October 24th. Really great trade, was up 52%, sold a quarter the first day, sold another quarter the next day. Now we're pulling back, fourth day pullback on very low volume and lower volume every single day. So again, if the market is still going to have any type of power, this is a kind of performance boosting trade that you could just take through today's high, stop at tomorrow's low, and try to play that momentum coming back. I would not be surprised if we take out today's low and I get stopped out on the rest. AOI bounced at the 10-day moving average and support gap today. Just another test of that area coming back into the breakout. So a breakout retest, support gap 10-day. That's the spot that I will be watching for. Not one that I want to buy on strength because we've got a flat 200-day moving average. So just kind of building out this base right now. PL is up next. I love the price action back in September where we had the highest volume ever on earnings. Gap down after a secondary offering, held the 5-day moving average that entire time, soaked up the secondary offering, and then quick rally from 960 up to $16. Since then, we've pulled back under the 20-day EMA, bounced at the support gap, pulled back into a higher support gap. And this was one of the names that was showing relative strength today, even though it was down. It was only down 0.3%. So a name that if we do get a gap up tomorrow, taking out today's high would be the buy point. Stop would be, for me, tomorrow's low. I really just want to play the momentum, if there is any in that name, and not try to stick around for like a longer pullback. XPEV, beautiful, beautiful base here. You could see volatility contracting. This is a Chinese equity name, so that's why there's so many gaps and why I don't draw the gaps. Uh, Stocks that trade on foreign exchanges, the gaps don't mean anything. But what I love here, we're building higher lows. I was really bullish on this, like back through here, because I thought this was the shakeout to the 10-day and we were about to rip. And then we got that text or that tweet from Trump about the trade war, sent it down, still built out a higher low, popped through the moving averages. Great relative strength today compared to the other Chinese equities, still holding over the 5-day moving average. And then on a bigger time frame, if we go to like a weekly chart, zooming out, this is a multi-year base. Beautiful multi-year base from the end of 2022 till now. It does not get cleaner than this. So if we see money rotating out of maybe US tech into other areas of the market, Chinese equities and specifically XPEV, you're not going to find a better base. Looking for another pullback into the 10-day moving average and the low from Monday as a potential, or Tuesday. Yeah, Tuesday, Wednesday, Thursday. Tuesday as a potential buy spot. I do have a position in this already, but I'm still trying to like build it out fully. So pullback into that 10-day would be a spot that I would be looking for. You could take it through today's high. I still think that the way this is tightening up, we just need one more pullback to really shape up the chart. So I would rather buy it or add on weakness. AMPX, very similar to the QS chart. If you want to tell me that this is a short because we've got a resistance gap, we've got this dagger candle on September 16th, really tight price action, I would say go ahead. Just through today's low would be the short, stop at today's high. And then the reverse, through today's high, stop at today's low would be the long trade. TMDX, I've been looking at these healthcare and healthcare adjacent names. We saw GH, massive volume breakout on earnings today. We see strength in biotechs. So TMDX in that healthcare adjacent space, something that I'll be focusing on the rest of this year and probably the beginning of next year. Had earnings today, big shakeout into the 20-day for like literally like 2 minutes, came back, reclaimed all the moving averages, still has this resistance gap at 136 area. So instead of buying on strength where I know sellers are present, I want to buy on weakness against the 129.25 support gap. That'd also be right around the 10-day EMA. And then just get my stop 2 or 3% under 125. MVST, same thing with QS and with AMPX. You've got your nice big move up. This does have multiple gap downs, which is definitely working against it. But the volume on this pullback is pretty light. So again, if we're going to have any strength left in this market, which I am not super confident about, today we had the undercut of the lows of the pullback and the 20-day moving average. We reclaimed the support gap and closed nice and strong. So great relative strength. Just through that high, especially if we get a little gap down, test the support gap, then take out today's high day. That would be buyable with the stop under the support gap low. And last one, ATEC. This is in healthcare equipment. So again, that healthcare adjacent space. And this is up 17% after hours. Let me go back to the earnings. So up actually 18% after hours, which where does that put us? Go to an intraday chart. We're at 1943. On a monthly chart, 1943. Look at this monthly base breakout on ATEC. It's not a super liquid name, still tradable liquidity, but we are breaking out of a yearly base from September of 2015 up till now. We are breaking out of that consolidation. So from big bases, you have high room and space. We have the right theme, and it's something that I'll be focusing on. Maybe not buying right away off the open tomorrow, but let it trade, let it actually show that there's strength in the name, close well, and a name that we could attack on Monday. There are traders that buy the gap ups, and you just have a 1 minute or 5 minute opening range break that you buy that breakout, put your stop at the low of the day. That could work. If you're going to do that, this is the type of setup that I would be most excited for because it's the right theme. You have a massive, again, yearly base breakout. But in this market, it's not going to be the first trade that I take. And then on the short side, we'll go OKLO. Some good strength today, early in the day, where there was a secondary offering. I believe we rallied back through the moving averages, actually went green at one point, but sellers are still stepping in at this 145 area. And then we ended the day kind of below those key moving averages, just looking for a break through today's low, especially if we can get a gap down, break through today's low. That would be the entry, and then just a stop over the key moving averages. GDX, this isn't ready. Well, this is likely not ready for tomorrow, but after the volume that we saw with gold at the top and the very sharp move down to the 50-day moving average, a bounce back up to the 20-day, maybe even get to the gap zone at $75. Then look for some weakness there, a loss of the daily VWAP, a green to red move, something like that. And you could short either GDX or, for me, go long DUST, which is the double leveraged inverse ETF for this. Costco, we've talked about this a while. Again, the average consumer in America is under a lot of stress. It's not a great market for them. We've seen other grocery stores like Sprouts enter its stage four downtrend. And just a reminder, what happens when a stock goes into a stage four downtrend? You get very quick and linear moves from 160 down to 75. This was down another 25% today. So with Costco, we have multiple resistance gaps, lower highs, rejections at the 200-day, rejection at the 200-day, then the 50, then the 50. Yesterday, we closed below the last support gap. Today, a little bounce up. Still would rather see an uppercut and failure at 924 as the short. Stop would be the 20-day EMA. This is already past earnings. And from there, we should just see a nice quick move lower. Circle, we've seen a lot of weakness out of the crypto names. I don't want to chase this lower, but today's gap down is the spot that I'll be watching. You also have all the key moving averages there. So a little rally back up into that area. If we get that tomorrow, or we get that Monday, that 130 spot is where I would be watching, and then keep your stop over the 20-day EMA. SMR, we now have 3 rejections at this resistance gap. So there's obviously sellers in that area. A little rally back to that doesn't even have to be at the top part, but a little rally back into that area you could short versus the highs of these days. Otherwise, a gap down opening range break, that would be a short entry. Stop would be today's closing price. You don't want that to go red to green. But this is in the nuclear theme, which is still relatively strong. But this is the weakest stock within that theme. So if we do see OKLO roll over and LEU roll over, then SMR, that's going to be the first one that you want to hit. Carvana, big gap down on earnings, really looks like kind of a break of the structure. And if you go way back, we have a double top short sale, their last earnings gap up. We go sideways and really only close above that HVC from their last earnings a couple days. Relative weakness compared to the indexes, then bounced, rejected at the 50, huge gap down today. Still don't want to chase it lower, would want to give it a little rally, maybe up to the 320 spot, Look for the daily VWAP to get lost after the rally up and then some weakness to come in. Stop would be at today's high. NNE, another nuclear name. So for the group being strong, there's a couple of names that I still am watching to short. We had that big bounce off the 50-day moving average. Now we're starting to see some weakness here. We did cover a resistance gap yesterday, so some strength there. But through today's low, stop at like $48 would be the trade. I would be more focused on SMR. That would be the first one that I would try to hit, then NNE, then OKLO. And last, we have ARQQ. This is, I, I think, really bouncing because they have quantum in the name. Moved from 26 up to 61. Huge dagger bar on October 16th. Sold off under the 50-day. Now we've bounced back, tightened up. And if you want to say, like, hey, Brigetti's really strong today, so this is going to go next, I wouldn't argue with you. But I would be watching for a break through today's low, stop at the 20-day EMA for that. If Rigetti is really strong and we get IONQ bouncing, and this does kind of bounce back into the gap zone, I think that's a spot where you could size it up a little bit more aggressively and then just get your stop over yesterday's high. So that's going to be the daily market recap for Thursday, October 30th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in the next video.